This is an excerpt from a MarketWatch article dated May 9th, and it states that the EAI forecasts that an average of 38 billion cubic feet per day of natural gas will be consumed to generate electricity in the U.S. during the summer of this year, which runs from May to September. This would be the second most on record, behind the 39 billion cubic feet per day recorded last year. Now, when we go to, this is coming from equityclock.com. This is the seasonality of natural gas prices going back 20 years. Right now, we are pretty much in June. So according to the seasonality chart, we should see a decline of roughly 5%, a bottom in July, and then prices will move higher over the next several months into the fall of roughly 15%. And this is supported by, this website is the cmegroup.com, and it looks at the price of natural gas with regards to future contracts. You see that the July future contract, you have a price right now that was last traded at 236. August, it goes up roughly 10%. You can see November, though, it shoots up from the current price of 236 to roughly $3. This is what we call contango, where the spot price is lower than the futures price of natural gas. Now, if we go to the natural gas chart itself, we can see that last week anyway, natural gas futures fell for a second day in a row and the fourth time in 5 trading days last week. The culprit was a lack of demand, mild weather, rising Canadian natural gas exports. In addition, we had strong production levels that kept price in check, while natural gas supplies showed no signs of declining according to the EIA weekly report. Despite the gas rig count falling 24 rigs in the month of May, the biggest decline since January 2016. So just going to the weekly chart before we get into the daily chart. Again, buyers at the $2 level have defended this support level. My short-term target for natural gas remains 350, but I am potentially expecting higher prices depending what Mother Nature decides to do the rest of the year. All right, so let's drill down to the daily chart. And we did have a support, which was resistance level at 240. 2 weeks ago, price spiked higher and hit the 100-day simple moving average. That serves as a dynamic resistance level at $2.70. Last week, we had profit taking along with milder weather, which pushed price back down into this resistance support band. Now, on this surge higher, price did form a daily buyer's level at 235. We can see last week, price came to the bottom of this zone, pierced it, but did not close below it. So is this level still valid? We'll see. Based on all of this trading action that took place last week, in my opinion, there are no more unfilled buy orders. So we could see price move lower and eventually close below this zone here. Again, according to the seasonality chart, we should see prices decline. So what would that mean? If you figure a 5% decline in current price, 10, that would be roughly, say, 15% from current price. So that would take us to, say, the 220 level. And let's just write that in. Based on seasonality to the 220 level. Now, I did get into some UNG leap call options. They expire in January of 2025. If we quickly go to that ETF, you can see a similar pattern as we saw on natural gas. In this case, price did make a lower low, but on the RSI, price is making higher lows. If we zoom out to the weekly chart, the first row test is going to come at the $7 and say 70-cent level, which mimics, if we go to natural gas, it's going to mimic the most recent high at $2 and say 70 cents. So if we go back to the UNG ETF chart on the daily, price needs to close above the 70 level on the daily chart in order to confirm that prices have actually turned. How high can price on UNG go? Well, if we go to the daily chart, this was last year in August when it hit a high of $34. Now, by no means do I anticipate the same thing happening. Last year was an odd year where there were several events that caused the spike in price. In particular, Russia cutting off natural gas to Europe. However, I do think that natural gas is going to play more of an important role despite excess supply still out there, and we should see price grind higher as this current level serves as an accumulation phase. Thanks for watching. Subscribe. Please like the video.